areas of expertise are energy, environment, climate change, decarbonization strategies, carbon market and trading, sustainability, resource and resource efficiency and material recycling, forest and wildlife. I invite our eminent speaker, Mr. Timo Bollerhey, the Chief Executive Officer of H2 Global Holding and Hintco, creator of the H2 Global Mechanism and co-founder of H2 Global Foundation. In addition, Mr. Timo has also been appointed the co-chair of the Certif HY Steering Committee, one of the leading European voluntary certification schemes. He is an investment and financial market expert with more than 20 years of experience. And before initiating and designing H2 Global, he worked as the director for the German Agency for International Cooperation, GIZ, in Brazil, focusing on blended finance approaches and the mobilization of institutional investors towards alternative assets. So, welcome to our eminent speaker and distinguished chair. And now request Mr. Gupta for the opening remarks for the session.
Good morning and welcome, Mr. Timo, to this international conference on green hydrogen. We are all well aware of the effect which climate change is having on us. The extreme events, floods, cyclones, droughts, they are already visible in higher numbers and their frequency and intensity has increased. The international community has been taking steps and making pledges for mitigating its effect. We all had set a target of limiting the temperature rise to 1.5 degree. I don't know whether that will be met or not. In most probability, it is going to be missed out. So we will have to focus on not letting exceed 2 degree. Well, in this whole energy transition and tackling the climate change, hydrogen is a very vital cog. It is a very important raw material for industries, particularly those sectors which are very hard to operate: steel, refineries, fertilizer. It's also one of the energy storage device, particularly for long-term storage, which we are very sorely lacking. So this is going to play a role which will determine the direction and the speed with which we can tackle the climate change. In India, we have been taking steps to introduce green economy and green hydrogen economy. Under site program of government, SECI has bidded for production of green hydrogen and also manufacturing of electrolyzers. We are going for second tranche of it. And different sector, I must say, have been taking steps for gradually introducing the hydrogen, particularly the green molecules, to decarbonize themselves. About a year back, Ministry of Steel has set up task force, about 12 task force for greening steel. I headed one of those task force, and only about 2-3 days back, the Ministry of Steel had released its reports which points pathway how they are going to decarbonize the steel sector. Fertilizer Industry and Fertilizer Ministry has asked us to bring out a tender for green ammonia to be used in fertilizer sector. Refineries are also doing their bit, and they are calling for tenders for green hydrogen, supply of green hydrogen. Some time back, Ministry of Power and MNRE was also thinking about bidding for a project based on power project based on using green hydrogen as a storage and stabilizing agent. So there are various efforts which are going on. Government is committed to introduce and develop this sector, make it viable. We know what happened with solar. We used to pay very high tariffs, but as the scale increase and with time and technology, the prices come down, and we are hoping for the same in green hydrogen sector. Mr. Timo's introduction has been given. He is the key person on the global front for making the instruments, financial and regulatory instruments available, which will bridge the gap between the prices, production prices, and the price at which the consumer wants it. We are also in the process of signing some agreement with Timo's organization and also with Germany to see that how we can collaborate in this sector in all its aspects, technology, regulatory affairs, and all other associated issues. So without taking much of time, I'll invite Timo to give his perspective of not only Germany, but the global perspective and how this sector can be taken forward and it can help in fighting the climate change. Thank you.
Thank you very much, Mr. Gupta, for that kind introduction. And as you already mentioned, I can't give you really only a German perspective here because I'm not representing the German government here, but I can give you a perspective of what the German government has chosen as one of the instruments that they want to use to create a market to foster the market ramp up, and also which has seen a lot of interest globally from other governments. Also, we're in discussions with the Indian government, for example, and also in collaboration, you mentioned it, with SECI, how we can use that instrument not only in Germany, because Germany, as I said, was one of the first governments to take up this instrument, but maybe also globally. What I would like to introduce here is a concept that we call H2 Global. And the idea here is really the question, how can we create markets that are really ramping up in terms of hydrogen economies, taking really economies of scale. So let me just see. Don't be irritated. I took the wrong slides this morning. It's not about clean fuels only. It's about clean or green hydrogen at the end of the day. And everybody talks about the market ramp up of green or clean hydrogen. We say there is no market that can be ramped up. We need to create that market in the first place that then in the second phase can be ramped up. Why are we saying this? What is a market being sort of determined by? It's determined by price transparency. Market participants know what is the price for that product. Where do the demand and the supply curve, where do they meet? What are the pricing signals? We do not have this. Nobody knows what is the levelized cost of green or clean hydrogen, nor do we know what is the market's willingness and ability to pay for it. There is no liquidity. Liquidity is a very crucial element of a functioning market. There is no real liquidity. There are no trades happening. A lot of MOUs being signed, but very little happening. If it happens, it's over-the-counter contracts that are being signed. So it's one-to-one, point-to-point contracts here, but there is no really liquidity. There are no clear rules out there. We're getting there slowly. For example, in Europe, with the delegated acts and the RED 2, RED 3 requirements that are being shaped as we speak, but nobody really knows what is green, what is clean, what are the criteria, what are the regulatory requirements. There is no international standards, not even national standards. This is all in the emergence. This is very important that we have that kind of security and visibility in a functioning market. That is not the case. And we need for a functioning market low market barriers, entry barriers. Also, this is not the case because due to all these elements that I just mentioned, there's very high entry barriers into the hydrogen market as we speak. So before we talk about a market ramp up, we need to talk about market creation in the first place. Why is this so important that we have market creation? Because a functioning market is the prerequisite for institutional investors, for private capital to flow into that markets. Alone in the next 10 to 15 years, we have investment requirements just for the production of hydrogen. I'm not speaking even about the infrastructure like a terminal storage that has to be provided. Just for the production of hydrogen, we need investments in the vicinity of 3 to 5 trillion US dollars. We have around 200 billion US dollars globally made available by governments to supply and to support and provide subsidies to that market creation. So we really depend that we are able to channel private investors, institutional capital into that market. That is the crucial element that we need to achieve in order to really see a market ramping up. So we need to utilize the public subsidies at the most efficient way to create that market. On top, we have what we call the offtake conundrum. We've talked a lot about in the last 3 days about hydrogen, about producers. Always the missing link here is offtake. Offtake is absolutely crucial. We have the situation that the production costs for green or clean hydrogen are still significantly higher than what the market is paying at the moment for a fossil-based product. Anything between, I don't know, 2 to 5 times. Nobody knows because there's no really price transparency. We also assume that the production costs will decrease once we have really economies of scale kicking in. At the same time, we have the situation that the market is not willing or able to pay that high prices that we see because obviously if it doesn't make economic sense to buy a green product, you buy the gray product. We also assume that instruments, regulatory instruments like CO2, quotas, mandatory effects will come into effect in the next couple of years, increasing the market's ability and willingness to pay for a green premium. So in a normal market situation, we will wait until these curves sort of meet, and that is when we really see supply and demand coming together. But we need an instrument that comes in between. And that is what we try to achieve here with H2 Global. We see hundreds of projects being announced. I think around 1,780 hydrogen projects worldwide have been announced. Less than 4% have reached FID. There's a huge discrepancy between MOUs being signed, LOIs being signed, and real action taking place because the producers, they are lacking investment security. I'm an ex-banker myself. Banks require predictable cash flows. For that, you need predictable offtake. And that is what is missing as we speak. And from that logic, we try to come in here with H2 Global to overcome that hurdle. The idea here, as I said, is really creating investment security on the supply, but also on the demand side. Looking at the supply side, what do you require? You need long-term offtake. You need a bankable and predictable offtaker. You need a fixed price, and you need clear terms and conditions. If you have that in place, you can really turn your project from pre-feasibility or FEED state, really take it to FID. That is when you go to your banks, to your investors, to your board, take the decision. I have that offtake agreement, so that we can take FID and we really can start producing. From a government perspective, we wanted to have a very defined system when we talk about subsidies. Personally, I'm a very skeptical person when it comes to subsidies. There's a high risk of misallocation of these subsidies. And we really wanted to give the governments an instrument at hand that they really utilize subsidies in the most effective and in the most specific way in terms of volumes, tenors, and what shall be achieved. And at the core of the instrument is a little bit like a CFD, like a contracts for difference, but it's an innovative approach how we deal with that because we are installing a physical intermediary between the supply and the demand side. We call it the HINCO, the Hydrogen Intermediary Company. And I always refer to HINCO as a very unusual trader because HINCO is really trading and it's the contractual partner on the supply and on the demand side. But it's a very unusual trader because he does something very stupid from an economic point of view. He's buying a product most likely at a higher price than it's able to sell it to the markets. So HINCO is actually making losses right from the beginning. And also the aim of HINCO is not to exist as a trader ongoing and becoming a global commodity trader. HINCO's aim is at the end of the day to get out of the market and let the market participants that are anyway there, the Trafiguras of this world and others, to take over the business once it is economically viable. So HINCO is sort of that intermediary that tries to overcome that chicken and egg situation that I just said. And we wanted to have this on a very competitive, on a very market-based situation. So we have introduced what we call the double auction mechanism, an auction on the supply and an auction on the demand side. And the idea here with an instrument that I will explain a little bit more in detail is really to simulate existing markets on the supply and on the demand side. With that double auction mechanism, we simulate that there is an off-taker on the demand side, to the supply side, sorry, that is really able and willing to pay the price that the producer needs to have, a levelized cost of hydrogen that is making also his rate of return that is required to take FID. When we simulate on the demand side, there is a provider of the molecules also providing these molecules at price levels that is competitive to them. They hopefully will be able to sell it to pay green premium, but not a green premium that was maybe bridging that gap at this point in time. So this is where we are creating demand side signals and supply side signals, because in a classical contracts for difference element, you always need a reference price that you determine that is either determining whether you're paying in or you're paying out. As I mentioned before, there are no price points. How do you define a reference price? And this is why we're actually defining these reference prices with this double auction mechanism here. At the core, as I said, is HINCO of the HG Global Instrument. HINCO, that very unusual trader that is doing this double auction. What we're doing is we're doing an auction on the supply side. For example, the first round of auction, I will explain later, we did that globally, obviously with the aim that we buy the hydrogen or the hydrogen derivative at the lowest price possible. We have a very competitive tender, so only the best and lowest bidder will get the strike and will get the contract with HINCO. We're providing long-term offtake agreements for the first round of auction that was 10 years at clear terms and at a fixed price. That is taking those projects then to FID. On the demand side, we're also doing an auction. Obviously, here the idea is that we auction at the highest possible price so that the cost of difference, where the government needs to step in, is kept at an absolute minimum. But we do a transformation in tenor and a transformation in volume. We're only auctioning on the short side. So we're really auctioning on with 1-year contracts, for example, on the demand side. And we do that for 3 very specific reasons. If you look at this graph, you see that horizontal line. This is the fixed price we pay over a 10-year tenor that is allowing projects to take FID. The lower graph is just a hypothesis how the price might be developing over the next 10 years. But we assume in the beginning there will be a substantial cost of difference that the government needs to step in. But through the yearly auctions, we assume HINCO will be able to participate in an increase of pricing or increase of green premium that the market is willing to pay. Elements coming in here, as I said earlier, CO2 prices, quotas, border taxes, all these elements have an impact on the demand side's ability and willingness to pay. So with that sort of short-term auctions, we achieve that HINCO is only being subsidized for really exactly that amount that is required to overcome the cost of difference. So that is a very effective instrument, like a CFD, for the government that we're only subsidizing that what is really necessary to overcome that market hurdle that we have. As I said, without a reference price, we are creating these reference prices ourselves. The other 2 elements are even more important or equally important, I would say. We are creating pricing signals. pricing signals on the supply, but even more important on the demand side. And we do this continuously. And the pricing signal on the demand side, that is so important because if a producer worldwide knows I'm just giving a number, €5 per kilogram of green hydrogen in Europe, in Germany, they can do their maths. They can calculate. They can know, am I in the money or am I out of the money? But they are lacking that knowledge. And that is why it's so important that we're creating these pricing signals. We make that very transparent so that the market has got an idea where is sort of the pricing determination in Europe in this example, what can I expect from the markets? And then they can also try to find their own off-takers. Secondly, we're creating liquidity into the markets because we are tendering in shorter, in smaller bets into the European market. So it's not only bigger off-takers that can really get possession of the molecules, but also smaller companies in Europe, in Germany, that really get access to the molecules. So we're really creating liquidity into the markets. And as I said, liquidity, price transparency, one of the core elements that are required to create a market. So that is why we believe we're really trying to foster the development of a functioning market here. Very interesting, and that's also maybe the discussion we had in the last days also in India, is this instrument is very flexible in its approach. For example, what we had now is the first tender where it was an import country, in this case it was the German government, supplying sort of the funds to overcome the cost of difference. In this case it was Germany, as I said. But you can also have joint import tenders. We're just preparing this for the next round of auctions. The Dutch government has been the first government to take this on. So it's a German-Dutch government joint H2 global window that we are preparing, each government providing 300 million for a joint window. So it's two importing countries joining forces, joining funds to use one single instrument. Very interesting is when we look on the right side, that you can also use that between exporting and importing countries. For example, we're just preparing the first joint tender with the Canadian government. It's a German-Canadian H2 global window, where the product will only be produced in Canada and exported into Europe, into Germany. And both governments are joining forces, are pooling funds to compensate for the cost of difference. Very interesting because also that is, as we see it, it's WTO compliant because HINCO, the beneficiary, is outside of the geography of the exporting country. So it's not an unallowed export subsidy from a WTO perspective. So it's really a very innovative approach how we can really use pool funds to have a very effective instrument. Just this morning, officially announced the second joint HG global window with the Australian government, where the Australian government and the German government will each contribute 200 million euros for a joint H2 global tender. So this has been the latest news from last night. And we are in similar discussions with other countries like the UAE, with Saudi Arabia, where the German government has sort of reached out the hand and said, let's do joint forces and invited them to have a joint H2 global window. It's a very flexible approach, as I said, and it also allows that different countries can contribute together for one single instrument instead of having a multiple of different instruments that are then not really in the scale that are required to overcome the hurdles that we see in the market. It's also, as I said, a very flexible instrument in terms of the governments are always the ones in the driving seat, exactly determining how the auction should be organized. They are the ones that determine in detail to HINCO. We're only compensating you for the cost of difference if you, I don't know, tender internationally, for example, or tender in a specific region, tender for a specific product, tender a product that is acquiring exactly that specific terms and conditions, requirements that the government wants to foresee. And that allows for the governments to use that instrument exactly in the way they need it to achieve their goals. For example, one goal could be of a government, we want as many molecules as cheap as possible. We want to diversify. We learned it in Germany, in Europe, the hard way, being very dependent from one single source of energy provider from Russia. So you can use that instrument really to diversify by setting up regional windows or country windows. You can also try to achieve developmental goals, for example. So it's a very flexible instrument, and it's exactly determined always by the governments how the funds are being used. However, it's important to understand Hindco is the trader and also sort of the physical owner of it. It's not the government trading, it's Hindco trading. The governments are only providing the cost of difference and the subsidy to Hindco. For the first auction that we have just also announced the first winner of the first tender, we received 900 million euros by the German government, by BMW. This case was an auction for 3 different lots for methanol, ammonia, and ESAF. And I will talk a little bit about that later. And we are already in the preparation for the second round of H Global tenders. Again, the German government providing 3.53 billion euros for the next round of auctions. We'll give a little of outlook for that as well. And we're preparing, as I said, the first joint tender with the Dutch government in the vicinity of 600 million, 300 million by each of the governments. And then we are preparing now the Canadian and also, as of this morning, the Australian joint window, each of the governments providing 200 million each. So this is where we're setting up. Also, the first auction was a global auction. The instrument can also be applied for domestic auctions, for regional auctions within Europe, for example. So it's not only an import instrument from a European point of view. The first results of the pilot auction, as already said, we had 3 lots out there: renewable ammonia, renewable methanol, and ESAF. And we just announced the first winner of the renewable ammonia tender. Maybe because it's public knowledge anyway, there were also Indian participants in that tender. Unfortunately, this time India didn't make it, so we really hope to see. We already received lots of signals that Indian companies and consortia are very interested to participate in the second tender. But here was really important, and we were really taken by surprise about the international recognition and interest in the outcome of that first tender. Fertiglobe, it's a consortia between ADNOC in the Middle East, in UAE, and OCI in the Netherlands. They won with their project in Egypt, the Green Egypt project. And very important was also the pricing signal that this very first auction gave to the market. We received a price of 811 euros per ton of green ammonia. That's a fixed price, not indexed over the contract period, and 1,000 euro landed. Why was this pricing signal so important? Because, in Europe, we have a lot of debate. Does it make sense to import hydrogen ammonia into Europe? Isn't it far too expensive? Is it viable? There are a lot of criticism about that. We really have proven that we can import, in this case, ammonia into Europe, into Germany at a really competitive price. I mean, the 811 euro, you have to take that into perspective in terms of the volume. This was the first pilot auction, a very limited low volume at the end of the day. We had around 300 million here. And also the tenor wasn't really 10 years. It was at the end of the day because we couldn't shift funds, or the government couldn't shift funds. We're talking about a 6 or 7 year contract period at the end of the year and at the end of the day. That, however, gives a very positive outlook that ammonia is really a viable option in terms of really coming into the money in the next 5 to 7 years, I would say, with 811 euros as an ex-factory price on these sort of framework conditions, low volume, limited tenor. It showcases that there is, let's say, room for improvement. It really gives a very positive outlook. That was really internationally very well received, that this is a very positive signal in terms of market creation and the viability of ammonia in this case to be successful. We also ended the second tender on ESAF. Here also very important, what we also try to achieve with H Global is providing real market feedback, because we could not conclude a contract here. And the reason was very simple. First of all, the volumes were far too small for new projects to be developed. And secondly, the EU regulation for existing projects did not allow to have a viable option here, because getting into very technical terms here, specific aspects of the delegated acts under the RED 3 requirements to meet so-called RFNBO requirements simply did not allow to take an economic viable situation here producing and exporting ESAF into Europe, into Germany. This is also very important because we're giving that feedback to the regulators, to Brussels here in this case, showcasing in real life, this is the real economy here. This is not sort of a theoretical experiment here. This is the real life, real economy feedback. If that is what is intended to be achieved, absolutely fine. If it's not what is intended to be achieved, maybe we need to reconsider how we determine specific aspects, for example, of the regulatory framework. The second round of tenders, I already mentioned, 3.53 billion made available by the German government, and an additional 300 million made available by the Dutch government. It's going to be most likely a regional approach here. So we will see global tenders, including Europe. We will see regional tenders, for example, for Northern America or Australia and Brazil, Asia, including India, Africa, and Europe, so that we really have different regions participating. Most likely, we will also see different products here, most likely a vector and a product open approach. Vector open meaning we're purchasing hydrogen, knowing that there is no pipeline or it's very difficult at the moment, irrespectively of the vector, how it's being produced and transported. So it could be ammonia, it could be LOHC, it could be methanol, it could be e-methane. All these different sort of products that are out there, they can be eligible to produce, to deliver hydrogen at the end of the day to Europe, to Germany. Product open approach. We are not specifically tendering out specific products like ammonia, for example, but really we're just saying a product with the highest energy density per euro is getting the strike. So we really allow the different products, the different vectors to compete against each other, which really also creates then more clarity to the markets, what is really viable. I would assume ammonia will play a very important role here, but let's see let's test the market, what is really viable. Very important, a lot of questions, when do we start with the next tender? It's currently still under negotiation with between the Dutch and the German governments and Brussels and the EU Commission, because we need to be notified under European state aid. We expect that to happen in the next couple of weeks, that we receive the results from that negotiations. Once we have the state aid notification and the details of that, we can then start preparing. So hopefully towards the end of the year, but I'm a bit skeptical that we will achieve that because it takes a little bit of time until we receive the notification. Most likely Q1 next year, we will start with the next tender auction. We were really surprised when we started H Global 4 years ago, never expecting that it will grow in terms of the volumes that are being made available to H Global, but also in terms of the international recognition and interest in that instrument. So we really have a very strong interest from North America. I see also Sunita, you're here. We had discussions, discussions also with the DOE. How can this sort of element of a double auction or the H2 global approach can be applied in the US? Also, contributing to the H2 demand element that is there. We have close collaboration with the Japanese governments and the Tokyo metropolitan government in terms of how can that sort of principled approach can be applied there. Same in other parts of the world, in Chile, for example, in the UAE. So there's a lot of interest globally in that instrument. And we're really happy, as I said, to also have now the first joint windows with Canada and Australia coming into place. A few last remarks. How is H Global being set up? When I designed H Global and Hinco 4 years ago, I thought Hinco is a state-owned entity. And we approached the German government. We approached the concept, and the German government made it very clear in the beginning, we do not trade with energy. We never did. We never will. We want this to be set up by the private sector, and we are only providing the cost of difference. So we thought, okay, how on earth can we set up an instrument that is actually, distributing, or we're not distributing, but receiving subsidies at really large scale, set up and run by the industry itself? How can we get this solved? And the way we solved that issue was that we created a non-for-profit foundation, the H2 Global Foundation, funded by donations from the industry. We started 2022 with 16 donors in the foundation, mainly coming from Germany. By now, we increased this to 71. We're also very happy to have 2 Indian companies also being a donor to the HG Global Foundation. So it's companies from all over the world by now. It's really an international foundation that we have set up here. And it's along the entire value chain. So it's really from producers to financiers to off-takers to technology providers that are here funders to the foundation. The foundation is, as I said, non-for-profit, and the foundation is only owned by itself. So it's not owned by the funders, it's only owned by itself. However, such a foundation is non-profit, but the foundation can own a for-profit subsidiary, and this is Hintco. And that setup made it possible that Hintco is independent from the governments, but also independent from the industry. And with that way, we made a very independent instrument here from governments and the industry that is receiving the funds. And that is very important that we are so independent also from the industry, because a lot of industry and donors said, do we exclude ourselves from participating in any of the auctions? No, you're not, because there's a firewall between the foundation and Hintco, and by that we really allowed that independence of Hintco. The foundation itself is not only owning Hintco, we're doing a lot of research, we're doing working groups also together with our donors. We do collaborations with academia, with Oxford, for example. We're also getting donations from philanthropic institutions like the Bezos Earth Fund. They've contributed to the foundation, to the work, to also do the outreach that we're doing, for example, in India, where we try to distribute the knowledge and also promote that instrument, not only necessarily using Hintco, but also promoting that instrument maybe in the regional and local context as well, like we do with Japan, for example. That is the setup of H2 Global, and I hope I could give you a little bit of insight, not how the German perspective is, but what the German government is utilizing as an instrument, and I'm looking forward to the discussion.
Thank you, Timo. A very good perspective on how to use government money for developing the market in a most efficient manner, being technologically agnostic and also giving the different countries opportunities to develop their own hydrogen markets and economy. Now, I'll request the session is not yet over. I'll give the audience, if they are having questions, we'll take few questions and then close the session. Yes, please. If there anybody, please give him the mic.
Hello. Hello.
Yeah.
Hello. Can I ask the question first? I got my.
Sure. Please introduce yourself and.
Can I ask? Oh, hello. Good afternoon, everyone. I am Anand Acharya, Senior Manager, Sustainability Department, GAIL India Limited. I would like to congratulate. This is a very innovative platform, and it's the need of the hour, because half of the time, apart from technology, we talk about price of green hydrogen. So I would like to understand what are the legal challenges you might be facing and how you are tackling it. Thank you.
I think we could spend like 3 days if I would elaborate on the legal challenges. I think I spent in the last 3 years more time with lawyers than with my family. So this is absolute white paper. We were the first ones also negotiating what we call the HPA, the Hydrogen Purchase Agreement. There was no equivalent in the markets. We thought we can really borrow from LNG or from the gas market. Not possible. So we really had to come up with a completely new setup here. Intense discussions also in the first negotiation rounds. I mean, you have to imagine we had like 5 bidders simultaneously negotiating that HPA, each of them coming with their own lawyers' teams. There's always the challenge between procurement law, between state aid law, between contract law. There's a lot of uncertainties out there. It's about, I don't know, availability of storage, for example. How do you define default clauses? How do you define the arbitration clauses? So all of that is really very nascent. and that it's why it's there are a lot of legal challenges, also regulatory challenges. The question, for example, I just mentioned for ESA, for example, in Europe, fortunately, we have the delegated acts out, which define sort of the RFNBO requirements in more detail. However, they are very Eurocentric. So how do you transform or explain to an Indian bidder or to a Chilean bidder what is meant by geographical correlation, by a bidding zone, all these elements? This is really, let's say, interesting to go through those processes, but it's important. We need to take the steps. This is hard work that we need to do now, that we create the market really that then can take off.
Hi,
Just
I'm Rajesh Malhotra here from Oman. I run an independent business consultancy firm there. I have two questions to you. First of all, thank you very much for giving us a good perspective about what you are doing in H2 Global. So, part one of the question is that this price which you have shown for the ammonia, obviously, to my understanding, this is already much higher than the conventional ammonia which is coming to the market. So, how do you manage to, or what could be the impact of this higher price, and how will you manage that? And my second question is that since the prices are fixed, as you mentioned, of course, this is a short-term contract, not as 20 years, but 7 years. And we are already seeing that the technology and other developments, the things are changing fast. The prices are expected to go down. So don't you think that after say 2, 3, 4 years, the when the prices in the competitive markets are much expected to be much lower, how will you manage that? Because you will be locked for 7 years. So these are my two questions. Thank you.
But that's exactly the idea, that we are locking this in now, because otherwise everybody would wait until it's not 800, until it's maybe, I don't know, 500 euros. That's exactly the situation. You need somebody that is willing to take a price, in this case, for example, 800 euros, that is required today in today's market environment to have a levelized cost of hydrogen on the producer side, that we really start producing. Otherwise, everybody will always wait. That's exactly the idea. Hopefully, in the next round of auctions, we will have bigger volumes and longer tenures. So I would definitely expect that the next auction we will see a better price. And also, we continuously in the next couple of years we should see better prices in the forthcoming auctions. And how do we deal with that price gap? Exactly, that is why we're getting the subsidy by the state, because we are not depending that we are achieving price parity on our sales agreements. That's exactly the idea. If we buy for, let's say we buy for land at 1,000, we're only able to sell for 600. The 400 are being compensated for. That's exactly the idea.
okay. You can have a separate discussion after the yes.
Hi, Timo. Patrick Hartley from CSRO in Australia. Thanks for a great presentation and for the announcement, which caught me by surprise today, but for the arrangement with Australia. My question is, it strikes me that you have the embryo of a trading hub here. You're actually, I mean, obviously it's inbound to Germany at the moment, but you could see this being a trading mechanism that could be used globally between many different countries. Could you see that working? Is that something you think about?
Absolutely. I mean, in 2 weeks' time, we are going to be at the New York Climate Week, also presenting what is called the Green Market Maker. We were very intensively working together with Business Earth Fund, with JP Morgan, with RMI in the US, with Bain Consultancy, about how a green market maker could look like. That's how also the DOE and Bezos and RMI got the attention of H2 Global, because they thought HIMCO is sort of the first role model for a green market maker. And also the internationalization of what I've just described is maybe already a first step to become an international green market maker. So exactly that is what we're presenting. Also the outcome of that discussions in 2 weeks' time at the Climate Week, where we will have a dedicated green market maker day and also presenting the outcomes.
Yes, sir.
We will have
Yes.
yeah, okay.
Yeah.
You'll be the
Yeah.
second last and then the last question. Yeah.
Thank you, sir. Sir, when all this exercise to do green hydrogen and all is being done to bring down the carbon dioxide emission in the world. So the target is to save the earth rather than to produce more carbon dioxide again and again. So the how much price is very important for any product which is replacing the traditional fuels is important, because pricing is not so much should not be so much important, because target is to save the earth. What is your opinion about that pricing? Because every time Europeans are trying to bring down the prices of the products coming from developing countries. If pricing is not so important to save the earth, then why to talk more about price? Thank you.
I think at the end of the day, what I said earlier, it's government funds are limited. We need private capital to flow into that sort of asset class. And they look at price. They look at it does have make to have economical sense. If we want the institutional investors, the pension funds, and others, the guys with the big pockets, to fund that $1 trillion that are needed, or trillions of dollars that are needed, they need to have an economically viable investment case. That
Yes,
is
sir.
why price is so
That is what,
important.
either we have to economically use the energy sources are available, or otherwise you have to pay more price. By reducing the prices, you are inducing more use of the energy.
I think the answer is you definitely need to go to net zero, but at the least possible cost. So these auctions, and how do you design your auctions, and how do you design your regulatory system, that determines that you pay the least price for ultimately achieving the goal which we have all set for ourselves. Okay, the last question is yeah.
So the cost that you mentioned for the seller, do you also consider a mechanism of carbon credits and tax included in that, or it's a independent thing which the seller has to manage on its own?
You mean the producer, in this case,
Yeah,
for example,
yeah,
Fertiglow.
yeah.
Now they have to take care of CBAM, for example, for all these elements, but that is included in the contractual arrangement that we have with them. So they have to take care to cater for that.
And
Yes,
whatever the cost will be applicable in 2027, that will be applicable.
exactly.
Okay, thank you.
Okay, you want to have the
Sure, yeah, if you don't mind, yeah,
go ahead.
thank you.
That's the last question. Yeah.
Great question. Presentation team of Valsa Lakshmanan from Versogen. My question is, you have looked at the supply side cost and the demand side price. However, if you look at the analysis from the government agencies like Department of Energy or even BNEF, they have a cost projection going into the future years. Have you found any discrepancies in the cost projection versus landed cost? And do you have enough data to make some predictive analysis on when these two numbers, both cost numbers, would coalesce to a single value or close to each other?
I mean, from what I learned in the last 4 years since we're doing this series, there's not a single week passing by without a new cost prediction and a new theoretical analysis where the levelized cost of hydrogen should be or what the market is willing to pay. We've seen we're getting calls like weekly from the BNEFs, from others, from Reuters, when you tell us the price, because they're really lacking price signal. This is all a black box. Everybody's got its own formula where they believe the price should be or could be. But this is why it's so important that we're detecting this price. Obviously, we were looking also at the forecasts, for example, for ammonia. And that is why I believe the price of 811 euros ex factory is so interesting. Because if you look at the forecast also from BNF, you see they see the rate price coming to around 600, 650 in the next 10 years. And honestly, we're not that far away there. So if we have higher volumes, longer tenures, I think price parity, as I said, can be reached for ammonia, for example, in my point of view, in the next 5 years. And that will be absolutely crucial because then there's no HINCO needed anymore. Then, the producers and off-takers can immediately, join forces and take their contracts.
Okay. Thank you, Timo, for giving a very good perspective on how to promote the market, the different issues involved in it, legal, and the how do you take care of the difference in the price which of the supply price and the expectation which the consumers have. Actually, this my view is there need to be is apart from some subsidies which the governments are paying, there also need to be some kind of demand push through some mandating of carbon emissions or maybe the hydrogen itself or ammonia itself. Either way, But without that, I don't think it will make commercial sense for anybody to go for it unless the skills are up and the price difference has been raised up by the skills and the advancement in the technology. So, gentlemen, it has been very good session for designing the markets and promoting the markets. Thank you, Tim, and thank you all. Thank you. Have a good day.
Thank you.
Thank you, sir. May I request our Joint Secretary MNRE, Mr. Ajay Yadav, to kindly present the mementos to the distinguished chair and the speaker. Uh, Ladies and gentlemen, we are starting with our breakout sessions at level 1. Here we are going to be closing. We'll have the quiz after lunch. The quiz timing is from 2 to 3:30. But please be with us for another moment as we express our thanks to our chair and to our speaker. And then inviting you all to level 1, where we have our breakout session starting. After lunch, 2 to 3:30, in this very hall, we have the quiz. And from 3:30 to 4:30, we are going to be having our closing session, the valedictory session. Once again, we are going to be joined by our Secretary MNRE. We're also going to be joined by Professor Ajay Sood, the Principal Scientific Advisor to the Government of India. Also, we have as our chief guest the Honorable Minister of State for New and Renewable Energy, Shri Shripad Yesu Naik ji, joining us in the last session. So we now invite you all to be moving to level 1, where we have our breakout sessions, which are going to be starting. I think many of them might have started now. We're going to be going now back to back with our breakout sessions at level 1. 2 to 3:30, we have quiz here. Thank you.
This world is one of a kind, a world where life thrives, vibrant and enchanting, where there is so much to explore and discover. We have inherited this world to nurture, cherish, and care for life, its myriad manifestations, and everything that comes along. In our journey towards exploring the realm of possibilities, expanding our horizons, we must care to give back, replenish what we have taken. Energy transforms. So must we. To live in harmony with the force of life. The time has come for us to take a stand and find better ways for a better tomorrow. The difficult is possible. The impossible, just a little difficult. We at SECI have already taken a pledge to find different ways to harness the power of nature. We innovate technologies that are bringing about a new revolution. Our goal is to initiate a movement that benefits the nation and the world. Invigorate our partners, our stakeholders, to give our future generations a chance to embrace a renewed future. SECI.
Gujarat stands as a pioneer of innovation and progress on the road to a sustainable, energy-independent future. On India's 75th Independence Day, Prime Minister Narendra Modi unfurled the visionary National Hydrogen Mission, catapulting India to the forefront of green hydrogen production and export. In January 2022, the Ministry of New and Renewable Energy introduced the awe-inspiring National Green Hydrogen Mission with a bold target producing an astounding 5 million tons per annum of green hydrogen by 2030. India's focus on green hydrogen for renewable energy marks a crucial step in reducing fossil fuel reliance. The National Hydrogen Mission's estimated 8 lakh crore rupee investment underscores India's global leadership, leveraging solar advantage and cost-effective production for a cleaner, economically robust future. With potential CO2 savings of 8 to 9 million tons, sectors like refineries, fertilizers, steel, and transport are poised for substantial green hydrogen adoption.
India is progressively focusing on innovative bid for supplying 24 by 7 power from renewables. Demand for energy in India will keep growing. There are huge renewable energy deployment plans for the next decade. These are likely to generate business prospects of the order of around 1.5 lakh crore rupees or $20 billion per year. This is a big opportunity to invest in India.
Gujarat, in this grand narrative, emerges as the trailblazer, a beacon of hope, and a symbol of audacious ambition, shaping the future of energy in India. Embracing the dawn of a sustainable era, green hydrogen takes center stage as the new paradigm, echoed by the visionary words of our Prime Minister. Gujarat, a natural